Live Nation, initiated by today at Rosenblatt, the firm saying the post-COVID concert boom will last for years. Price target 138, 30% upside from here. Josh Brown, you own it. Do you still like it?
Not only do I like it, but I fully agree with the rationale that the analyst is making. I've been making it. The stock's been an absolute horse. Over the last year, the S&P 500 is up 4% in total return. Live Nation is up 34%. Over the last 6 months, the S&P is down 5.5%. This stock is up 10%. It acts better than almost everything else I own. I think it's one of the best names in the S&P. If you're in it, I would keep it. If you're not in it, I would use the weakness to find an entry.
Okay, let's talk Disney, guys. All right, the price target was cut today because kind of rival calls here. Price target cut to 140 from 175 at BMO. Reiterated buy at Deutsche Bank, and their price target remains 191, Amy. So, I mean, the spread between those two numbers is rather large. Where's yours?
Huge. I'm more with the latter, analyst. Obviously, the political noise has been really disappointing and has impacted the stock. But I can say almost the exact opposite of everything Josh said about Live Nation, about Disney. It's been a complete dog year to date. But I do think it, and probably one of the worst stocks in my portfolio, but it will benefit from a reopening. It's trading at 23 times next 12 months earnings, which is really cheap for them. They still have great content. I think their streaming business will do just fine and will not be plagued by a lot of the issues that Netflix had. So we like it here. I mean, obviously the political controversy, notwithstanding, but I think the fundamentals are pretty good.
Where's my value investor? Stephanie Link. I'm looking at Disney right now. Why doesn't this interest you at all? As much as the stock's come down, it's down 25% year to date. Over the last year, it's down even more, 36%. No interest?
No, I really don't. I mean, I do believe in the reopen and the theme park play for sure, but this stock really does trade on OTT, right? Streaming and that sort of thing. And they're going to have to spend a ton of money, a ton more than I think that they even realize, especially given that Netflix is spending $17 billion a year. So I think it's going to, that whole space does not interest me at all. And it's 23 times earnings. If it gets to 16, 15, 16 times below the market multiple, I'd buy it.
Pete, give me something quick. You own Disney stock or options or both?
I actually own the stock, not the options. I sell calls against it, Scott, to try to get back a little something. But, I thought I was really positioning myself really well when the stock dropped as significantly as it did when I bought it. It just continued to drop as well. I think the biggest part of the problem right now, streaming. Everybody knows it. That's what the weight is. Everything else is a reopen that I think does work in Disney's favor. But right now they're being punished because streaming was why so many were buying it. Now it's why so many are selling it. I think that's the wrong decision. I think this is a stock that can turn it around.